Well, howdy, folks. Quick update on the market, and you're probably wondering what's going on with the pairs that we're looking at, the euro and the pound, various currencies against the dollar. And then also we're going to look at a couple of the commodities, including natural gas and oil and gold. Gold's pretty interesting today, so we'll have a look at that. Just watching my charts as we're going along. But let's have a look at the short-term charts on the currencies very quickly. We've got the euro and the pound and the dollar yen. The dollar yen pairs, the yen pairs have generally collapsed, which is fantastic because we're short. We have been short dollar yen, euro yen, most of yesterday and today, and we've seen some good profits on those. If we switch across to the chart that shows them on the day chart, you can see that the dollar yen actually reacted beautifully at the level that we wanted to sell it at perfectly. We got up to that trend line. It's kind of a head and shoulders line, previous resistance and the 200-day moving average. Perfect area to sell the dollar yen into, and that's where we got. And we just sold off there straight through this red support line that I'm touching on the chart here right now, down below the 50 and the 20 period moving averages, and we're now heading down towards the 100-day moving average. There's the 200 where we sold off. So beautiful entry, and we were short right at the top of this one. So really pleased with that trade. Same sort of thing with the euro yen, although this got up a little higher than we thought and not quite as high as we expected on the second go. But we started selling at this green line, and the reason for that is because it's previous resistance. But also we had further resistance up here at 153.62. We didn't quite get there, and these charts are taking a little time to load, but there's another big resistance level up there, 153. We had, I think, an order in at 153.80 to sell. We sold a little bit here. We got some in on this first bit, but it didn't get up to that next level. However, we're still short. We still got into the short. We're not short at the moment. We're looking for an opportunity to resell this on a bounce. And a great place to sell this back on a bounce would be up around 148, somewhere around there, 148.20, particularly 148, the big round number, and also 48s, 8s and 20s, 8s and 2s, 80s and 20s are great on currency charts. Look to resell that one into 148, and if you're wondering where to resell the dollar yen, there'll be opportunities to sell this on a bounce too. And we're looking up against this red line here and this previous high. That would be around about 134.50 to 134.80, somewhere around there for a bounce and a resell into that resistance zone on the dollar yen. And I think we can see these pairs begin to move lower. I said a few weeks ago, and actually during the early part of this week, that these were my favorite pairs, the yen pairs, and that is now coming into fruition. Same thing applies to the euro yen, to the Aussie yen and the CAD yen. So we're basically short on the pound and on the euro. We've also been selling euro CAD and pound CAD. Those are beginning to move down nicely. Pound CAD's an interesting one. Let's show you this as an example. We moved up against that green line, which is a long-term downward trend line. We got through this first initial line, broke up through that quite easily and above the 20-period moving average. But this green line here, and I'd have to get my weekly chart up, and my internet really has gone slow. There you can see that line. It's just popped up. That green line there is a long-term resistance line. We've just reached up into there. It's also an area of tremendous consolidation and buying and selling and supply and demand, which goes back years into 2019 and beyond that. So this whole area here is an area of enormous interest for this pair, British pound CAD, and I think we can get a pullback from here back down towards these moving averages, and maybe even down as low as 1.6. We're at around 1.7 now, so maybe 1,000 pip downside for this one. So I'm also quite keen on that. Having said all of that about those pairs, we've looked at the currencies. Stock markets, this is an interesting one as well. We're short now. We've been short Nvidia. We've been short Apple. We took some profits on both of those. We haven't been shorting the indices very much recently. And we're also still short Microsoft now. I think Microsoft is an opportunity to sell for a move down. It's really overextended. It's a fluctuation in earnings and reports from across the tech range, ups and downs and ins and outs. And this really has rallied up. If you look at it from the beginning of the year, we've gone up from around 220, around about 220 up to 310. And this area that we're at right now is just about this long-term resistance level. And we've just got this little gap up above us that we've just touched in there. You can see if I just zoom in there, that little gap going back to 2022, exactly a year ago, April 2022. That's where we are now, and we've just filled that gap over the last couple of days, and we're now looking for a move down after that consolidation top has begun to form on Microsoft. It's possible that we could just pop up a wee bit more. I hope not, We haven't got a lot on this, but we've got an interest in this one coming back down into these moving averages, possibly down below 300, down into 280, maybe even 250, 260, all the way down here, where the 200 period moving average is. So that's Microsoft. And then I've been putting this up on Twitter, not so much the Nasdaq. Nasdaq's been pretty strong, but if you look at the S&P 500, I keep on putting a tweet up saying this top here is like a brick wall. And if we go all the way back to May 2022, almost a year ago, we haven't managed to get above there, apart from that one brief period. We're well above the 50, the 100, and the 200 period moving averages. These all perfectly lined up together and going sideways. They're not going up, they're not going down. They just form a big fat support beneath us. And the market's going to struggle to get through those. But when it does, and if it does manage to break down below the 200, then watch out below for Microsoft. We've got, sorry, not Microsoft. Watch out. So then watch out below for the S&P, because we've got these big numbers below us. We've got 4,000 below us, then we've got 3,900, 3,820, all of these sorts of levels, these support levels, and we could go all the way back down to the low of last year at around about 3,420, thereabouts. So I don't know, with all of these banks collapsing and all of the news and interest rates likely to continue to remain at least at these rates, possibly go higher. Maybe one more hike. I don't know. Who knows? I don't think Jerome Powell was very, very clear in that we're not cutting interest rates. That's not going to happen. And if he is to be believed, there will be no interest rate cuts this year. No Fed pivot. We've heard that from Lagarde in the Eurozone this morning. The same thing. She said there will be no cuts. In fact, she was talking about further rate hikes. And despite all of that, in fact, despite her hawkish tone, the euro has actually fallen down today and not rallied, despite her being pretty sort of stubborn and belligerent about the fact that there could be and there probably will be further rate hikes going forward in the eurozone by the European Central Bank. So we'll have to see what happens. And as it happens, the euros actually continues to move down, which means that there is some belief in that the dollar strength will continue and from where we are at the moment, which could portend or foresee rates remaining at these levels where they are at the moment at least, and possibly even one more rate hike for the US, so by the Fed. So interesting, but they're looking very weak. Stock markets, Nasdaq just curling down. We made a new high, a fractionally new high this last week or two, end of last week, just falling back down after the interest rate hike. Same with S&P moving down. We're seeing Apple, Nvidia, not Nvidia, the US 30 looking very weak, breaking down through its 100-day simple moving average. So all looking a bit weak. And then let's look at these quickly. This is very interesting. I'm not even going to look at Bitcoin. I'm not going to look at anything. We're in this stock, uranium stock, out of interest, URA. Going to have a look at that. We're long on that. That's an interesting study, which I might do a separate video on. We're long on oil after yesterday's big spike down, massive spike down. We've held that shape beautifully, just touching through that level. The moment I saw it, it was 4 o'clock in the morning my time, and I got into oil. This is WTI, but oil, Brent crude, WTI. Doesn't matter what you're trading. We went long straight away, and I sent out a signal to my members at 4 o'clock this morning. Probably woke some of them up and maybe irritated some of them, but there was an opportunity to buy oil after that big move, and that looks pretty good. And if that continues to hold, that spike following this sort of spike low here, this level of multiple wicks on candles, we could see oil moving back up into this channel, back to the top of the channel, up through this downward trend line, and further up into higher levels, which is actually what I'm expecting for various reasons, which I'm not going to go into now. So we're long on oil. Natural gas, you know that I'm out of this. This is just collapsing. I'm pretty glad I got out at 2.2, which is at this level here. Not going to do a natural gas video today, but I'll do one in the next day or two. I think if we get down to $2, I might be tempted to buy again. But if we do get back down to $2, it'll be the third, actually it'll be sort of the third attempt. There was the first one, maybe the fourth attempt, second one sort of over here, third. There might have been 4 attempts at this level already. We're making consecutively lower highs on this day chart on natural gas. And if we do get down to $2 again, which it looks like we're going to in the next couple of days, then I think we're going to have to see a break of $2, and we're going to see $1.80. And when we get to $2. I might just try a little long there. I'm not sure. I'm going to look at it and see if the price just blasts through there and shows no sign of reversal, no intent, or if it just gets there and stops and doesn't rebound, or it just doesn't show any reaction to the $2 level, then I won't be buying there. But if we get a rebound or hesitation or consolidation around there, if we form a bottom or a U-shaped bottom or some reversal candles in that area, I might consider it. But if we just blast through that level and get down to $1.80, then I'll consider buying natural gas for sure. $1.80, $1.50. Those are my two levels below $2. Interesting to look at those for buys. And depending on the rollover and the dates, if and when that happens, I'll have to decide about the timing. We've just had a rollover over here. So that was on the 27th of April. We've got another month or so. We've got 3 weeks left before the next rollover. And the rollover always creates havoc in trading natural gas, particularly if you're not experienced with trading futures. Can be a bit of a nightmare. Let's see how that goes. But if we get down to $2, let's see what the reaction is there. If we bust through $2 and smash down through that level, which is quite possible, then we'll look at $1.80 and potentially even $1.50. And I think that's it. Oh, gold. I must just talk about gold because we're short on gold. I don't know if this is going to work out. It's a very tentative, very small short, but we've reached that level. We've reached the top, just shy of 2070. Or I think we got up to, what was the high there? I think we got up to 2066. That's where we got to on gold. The previous two occasions that we've done that, we've seen massive rejections back down into this consolidation zone at least. And then, in fact, end of last year, we got all the way down to 1600 thereabouts. But this is the area here, right in the middle, where gold becomes super interesting. And I don't think we're going to get through there again. So if we can get down to some of these Fibonacci retracement levels, let's start at around $19 to $19.20. Then let's look at 1880, this next Fibonacci level. And then maybe 1780. That'll take us right back into this middle here, and that'll be a really interesting place to buy gold, and I'd be expecting a move up any time from any of those areas. However, we are short gold, but however, if we don't move down from where we are right now, then gold is going to break up through this high and make a brand new high and move up pretty rapidly, and it's going to clear out an awful lot of short positions, short hands that people that think that gold's going to fall straight back down. It could well do that, but if it doesn't and it breaks up through that level, I think we're in for a big firework display from gold moving up into 2,100, 2,200, 2,300, and who knows, by the end of the year, we could end up in the mid-2000s, somewhere around there. Let's go with a short for now. And let's hope for a dip back down into some of these levels to cover our shorts bit by bit as we move down, and then start to look to buy at around about 1920, and then allowing for a move down into 1880, 1850 at the most, where I think, and perhaps even this very tiny little low here that was formed, that's down as low as 1820. I don't think we'll get that far there. So that's gold, really interesting. We're short, as I said, but it's a small position, and I don't trust it at all. I think there's going to be some interesting action taking place over the next day or two or three. We've got the non-farm payrolls tomorrow, and jobs seem to be really, really key. Jerome Powell keeps on mentioning jobs as being key to his whole process of decision making regarding rates and what the Fed's going to be doing going forward, going into the rest of this year and so on. Jobs are really important. And we saw today, in fact, that once again, average hourly pay has risen, and the ongoing jobless claims has actually dropped. So not good signs for gold, not good signs for stock markets, and pretty good for the dollar. Have a great day. Take care. If you enjoyed this, please like the video and consider subscribing to the channel if you're new here.